Hi, in today's video we will cover support/resistance zones. Support/resistance zones are zones, levels, where we are active and where we monitor market activity using order flow. You can recognize these type of key levels by the fact that the price stops or bounces off of it several times. This means that buyers or sellers are active at these zones, and the probability that they will be active there again is quite high. If you see support zone, it means this level is lucrative for a lot of buyers. On the other hand, if you see resistance zone, it means that this price level, price zone, is lucrative for sellers. Once the price reaches these support levels, we can expect a buying activity. If this activity is confirmed by the order flow, we open long position. Conversely, when the price reaches a resistance, we anticipate selling activity. Again, we monitor order flow, and if we detect selling activity through order flow, we open short position. When the price reaches support or resistance level, it doesn't mean we immediately open a position. Instead, we carefully monitor how the order flow behaves around these zones, and only then we decide whether we take position or not. And this is really important. So, if you see price level on the chart where the price has bounced off of multiple times, you can consider this level as a strong support or resistance, depending on which side price bounced from and in which direction. Important thing, resistance can turn into support and support can turn into resistance. Yes, this is also possible. If certain support level, let's say 30,000, holds the price several times but then is sharply broken, it turns into resistance. The same applies in reverse. If there is a price level on the chart that has rejected the price several times but is then sharply broken, it becomes a boundary and turns into a support level. Once the price returns to these levels, we can expect a bounce from these former support or resistance zones, and once again we can start monitor order flow there. You may ask, why does this happen? If we know that at level 30,000 were many buyers, and the price then breaks through this level, all of those who bought there are now at a loss, and they will want to get rid of their positions. They'll do this by selling as close as possible to the price they bought at to minimize their losses. So a level where heavy buying occurred can become a level where heavy selling is likely to happen. Whether selling actually takes place there is something we confirm by monitoring the order flow. That's why we don't use these support and resistance zones on its own. We combine these zones with order flow. Therefore, we can maximize our chance of winning. The best timeframes for identifying strong support and resistance levels are the 1 hour, 4 hour, and daily timeframe. Higher timeframes always carry more weight and tend to be more respected. Here we can clearly see a clean chart with very obvious support level. The area around 112,000 price point used to act as a strong resistance. However, the price broke through this level aggressively, and when it came back, the resistance turned into a support. This exact moment is what caught our attention. Here we have an example of strong support. The area around the 78,000 level acted as a support in the past, and whenever price reached this level, buyers showed interest and pushed the price up from this zone. So this gives you an idea of the key levels we focus on. On our website, you will find complete order flow course, including the free PDF learning materials. So if you found value in this video and want to continue learning, visit our website. The link is in the description of this video. Thank you so much for watching.